Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short. My name is Alex and I'm just going to review the stock, commodity, bond, and Forex market. So without any further delay, let's go ahead and go over these markets. Dollar index went ahead and pulled back and has been able to find some support at around 77.50. It bounces off it and it goes a bit higher as the euro US dollar finally has a pretty decent pullback. As you can go ahead and see on the 6-month chart, it does pull back and it continues its downwards momentum. Now, because of that, let's go ahead and look at the next chart, which is going to be the Dow Jones, not the Dow Jones, but the Nikkei 225. Nikkei 225 does have a bearish engulfing pattern. It does engulf all the previous candlesticks. This is an indication of further weakness and a continued downtrend in the Japanese stock market. Bond market is doing awful in Japan as they did get a downgrade from Standard & Poor. Standard & Poor downgrades Japan debt, and we know the reason why. Well, at least I'm going to say it, and I'm going to be very blunt and honest with you guys. Japan's GDP is at around 4.338 trillion, and its percent of GDP to debt is at around 200. Yeah, it's really high up there. I think it's like 297%. No, 196%. Oh, that'd be awful. It's 200, but 196%. That pretty much means that Japan's debt sits at around, give or take, 13 to 14 trillion dollars. So that's more debt than just about almost any country or every country in the world aside from the USA. Japan is considered the world's second largest economy, I believe, and pretty much it's really touchy right now. Yeah, Japan has actually the third largest economy in the world, and that's bad. That is really bad. That is considered superpower status, and if one superpower is crumbling due to debt issues and it cannot repay, that will cause global economic chaos. It could be worse than the Great Recession, because what happens is that if $13 trillion is not repaid, that means $13 trillion no longer exists in the world economic system. What happens when $13 trillion disappears is mass deflation. That results into mass depression and global market chaos. Because of that, we have to watch Japan very closely, because Japan is the world's biggest problem on our hands, without a doubt. It's not the issues in the USA and the Europeans that we should be focusing on anymore, guys. It is Japan. Japan will be bailed out, and it's going to happen from one central bank or another. Whether it be from the Republic of China's central bank, whether it be from the Federal Reserve, whether it be from the European Central Bank, it doesn't matter. Some of the world's biggest central banks will have to bail out the third or second largest economy in the world. Okay? That's just the bottom line. That is the biggest issue on our hands. This economy is 50 to 60 times larger than Greece, and its debt is 140 times the size of Greece. This problem alone could derail the whole economic system. Because of that, you guys got to be very careful, because any news out of Japan, negative or positive, is going to impact the market from this point onwards. That's another thing that I do want to bring out. What causes a lot of politicians and a lot of countries to fear Wall Street corporations, particularly rating firms, underwriters, stuff like that, is because we're all in this tight little knit that we call Wall Street. And what Wall Street does is that they rate government debt. And when Wall Street downgrades their rating on government debt, that in turn causes the value of the debt to go down. That results in a ton of losses for any form of government, and that is what pretty much puts Wall Street, well, that's pretty much what puts China in Wall Street's back pocket. That's what allows Wall Street to go in there and say, you know what, we are going to underwrite most of your deals. It doesn't matter what IPO comes out of Shanghai or Hong Kong, we want to underwrite the most of them. And the government's going to be like, well, you know how pushy the Chinese government is. They're a bunch of jerks. But, you know, Wall Street is even meaner. and they are the biggest economic manipulators in the world. And one way to manipulate the economy is to rate how much a government's debt is worth. And any Wall Street firm with the guts, which they do have the guts, if any government in the world wants to downgrade a country's debt, this is the case scenario. Markets sell off. Value of debt goes down. Government officials going crazy. That's what gives Wall Street power. And after Wall Street downgraded Japan, Japan's overall economy and overall stock market collapsed, bonds collapsed, people fled into the U.S. markets. This is what gives Wall Street power. Nothing more, nothing less. The institutions on Wall Street have just as much power as the Federal Reserve, if not more. That's what power is, manipulation of economy. And that's what Wall Street firms do, and they do on a regular basis. Let's go ahead and look at the next chart, which is going to be the Dow Jones Industrial Average. Dow Jones Industrial Average went ahead and pulled back. It touched the 20-day moving average, but remember, the downtrend is in play. We have this bearish engulfing pattern that engulfs pretty much around 6 trading sessions worth of trading. Very negative. On to the next chart, Forex Gold. Gold, it does bounce back up, but remember, it wasn't able to engulf the previous candle. And another thing that I do want to point out is that the gold market is going to be weak still. I still feel that because the dollar index is going up, even though there is some turmoil coming out of Japan and Egypt, the overall trend is negative, and gold is still a bit overbought. I still feel that the 1,280 level is the key target we should look out for. Silver has continued to push itself back up, but it has found resistance on the 28 area. $28 has been touched 1, 2, 3 times, and many times before that. Because of that, it is a strong resistance area, and I'm very doubtful that it will be able to break above that. But there is a possibility it could happen. But remember, when economies deflate, and Japan is a deflating economy, that in turn will cause deflation around the world. Deflation is really bad for currencies and commodities alike. But gold is a special exception. But with the dollar index going up and negative world events going on, the effects kind of negate themselves. Let's go ahead and look at the next chart, which is going to be the bond market. Bond market goes up in response to a stock market pullback. Stock market pulls back in response to what happens in Egypt and Japan. World markets pull back. Dollar index is the dollar considered safety. Is a lot of investors flee into the dollar to people take those dollars and buy U.S. Treasuries. Just how it works. That's how the economy runs. Crude oil goes up, but there's no fundamental reason for it to go up aside from some social impact that could be caused by the riots going on in the Middle East. But that's not enough to cause crude oil market to go up over the long term. We've seen something similar with an oil pipe leakage, and you know what? I still think that over the longer term, crude oil is still a goner. It's still on a longer term downtrend. So, you know what? I think we'll touch the 20-day moving average, and chances are we're going to pull back again because it was an event-driven rally, not a natural rally. Let's look at the next chart, which is liquidity services. Liquidity services is a key chart, as I will point out. Market is bumping into this area quite a bit. Once it trades below this area, we can anticipate a pullback right into the zone, and we can anticipate a market trading at around 1230 on liquidity services. So a short would be the right thing to do in this type of channel setup, and also because overall market sentiment is fairly negative, chances are this stock will be impacted as small cap stocks were hit by around 2.5% today, and small cap stocks generally do perform worse than larger cap companies. Because of that, this stock will have to react to it some way, somehow, and when it does, which it most likely will, it will trade right back into this channel. And just to let you guys know, it is a 600 million market cap stock, so thinly traded. Next chart, Direxion Financial Bear. Financial stocks are going to continue weakening, and because of that, you guys got to buy some stuff to protect your portfolio a bit, because there is a lot of issues coming out of Japan, some issues coming out of the Middle East, and overall markets aren't feeling too pleased about what's going on globally. So you got to be very careful of this market, and right now is a good time to protect your portfolios from more damage being done in the banking stocks. Let's go ahead and look at the next chart, which is Las Vegas Sands. Like I was mentioning yesterday, I noticed that it was touching the 20-day moving average, but wouldn't be able to break it. It pulls right back into this area, and it's going to continue its downward trend from here. Chances are it's going to break below this trend line and continue lower into the $30 area. Remember, Las Vegas Sands is a stock that has a PE ratio sitting somewhere around, give or take, 1,492. Forward PE ratio is 34. The average PE ratio forward in the casino and gaming industry is at around 22.45. So one can reasonably assume that this stock is a bit overbought. So the likelihood of this continuing to go higher is very slim. In fact, it should go down in price, and it should break down. And below this trend line, a reasonable valuation on this company from a fundamental standpoint would be at around 30 to 35 bucks, but chances are it could go all the way down to around $29. In fact, even if it went below $30, that would still be a reasonable valuation on Las Vegas Sands. Let's go ahead and look at the next chart, which is going to be the Abercrombie & Fitch. Abercrombie & Fitch is a key play. I do want to point out Abercrombie & Fitch will continue to be weak as retail stocks are going to perform poorly in this market environment. Retail stocks are continuing to get hit hard. And because of that, one stock that you could play to the short side would be Abercrombie & Fitch. It continues its downward trend. And also a key area of support would be the 38 area. Watch out for that closely because that will be a key area where you can go ahead and cover your shorts at. That's all I pretty much want to go over for today. If you guys want to check out the trading software that I use, please be sure to check out the link above or below this video. And for all of you guys on YouTube, please be sure to subscribe. It's not that hard to do so. And if you guys are on Facebook, please be sure to tell your friends about me so that they too can learn about the stock, commodity, bond, and Forex market. That will be all for today, and I will keep on posting videos for you guys for the coming weeks and months ahead.